In a recent video, I showed you how to use the Robinhood app and platform to find the stocks that Robinhood traders are more focused on right now. In this video, I want to take it one step further and show you how I take those most popular stocks and scan them for bullish and bearish opportunities. So, let's get out of the subway and let's get to work. Hey everyone, Tom Gentile. Welcome to Tom's Trading Room, where you know what we do here. We show you how to spot rules-based opportunities and create alternative risk trades other than simply buying and going long stocks. And in this video, I'm going to show you how to take the Robinhood most popular stocks and look for bullish and bearish opportunities as a rules-based trader. So we're going to do that right now. Before I move any farther, let me do this. Let's go ahead and talk about this disclaimer on the screen. I got to get past this. Pause it right away, and you can read it in its entirety. But I want to mention two quick things. Number one, stock and options trading, you have large potential rewards, but also large potential risk. And number two, you know I'm not your money manager. You know I'm not your investment advisor. I'm here to educate you on how it is that I spot these rules-based opportunities. That being said, let's get to work. And in the last video, I talked about what you see on the screen right here, and that is the Robinhood most popular stocks. Now, remember where I got these from? I went to Robinhood.com, and either with the phone or on the desktop app version, they have an area where they have their special best lists, and one of them is the top 100. What I'm sharing with you right now are the tippy tops, the top 10 stocks traded by Robinhood traders. And that includes Robinhood stock itself. Coinbase is number 2. Apple, the third most popular stock traded at Robinhood. Tesla, number 4. AMC, no surprise there, number 5. But then the next 5 might surprise you. Sundial Growers is on the list. Ford Motor Company, NIO, Amazon, and rounding out the top 10 is Disney. Now, what I do with these is I take my software at tomsoptiontools.com. I take all 10 or as many as I want. I put them into a list and I save that list. And so what I do with that list is there's a number of things I can do with that list. I can create a list right on my tools. I can scan that list for technical indicators, fundamental indicators, seasonal indicators. But I also want to show you the results of one of our trade scans and then how to take that and create some opportunities. And it's quite interesting because of the list that I'm going to show you, there are 2 that actually are in the same industry, but completely different animals when it comes to looking at their stocks. So here's what I call a tale of 2 car companies. I re-ranked those 10 stocks, and actually what ended up happening was only 9 of them made the grade because Robinhood itself does not have enough data as a tradable company for me as a rules-based trader to spot any rules-based opportunities. But what we did here is I took these stocks and I re-ranked them within the last quarter. Which stocks are the strongest right now on the charts and which ones are the weakest? And Tesla Motor came in number 1. It is right now hitting new highs for the last quarter. Since the last quarterly earnings to this quarterly earnings, Tesla's made a turnaround. Tesla's high, most recent high, was over $737. Its low in the last 3 months was $572, and it's sitting right on its high right now. Apple right on its tails at number 2. And what you can see here is just as you go across the screen, you will see not only the price, high price, low price, close price, but then you can see something called close minus low divided by high minus low. That basically means where is it in the last 3 months and where is it relative to its high. So we see Tesla on its high. We see Apple right nipping at the tails with its high at 153.12 and its low at 123.54, and it's at 152.25 most recently, 97% off the bottom. Only less than 3% from its all-time, its high in the last 3 months. Then they drop down. You see Disney, Coinbase, AMC, Amazon. Then they get really cheap. The bottom 3 with NIO down there near the bottom. It's only 15% off of its lows for the quarter. Sundial Growers also 15% off the lows for the quarter, and Ford Motor Company clocking in at just above 15% off of its lows. I picked these two for a reason. Let's talk about first number one. The first stock that I want to look at is Tesla Motors. Now, take a look at Tesla. This is what I'm talking about in the quarter. Now, this chart goes all the way back into April, but we're talking about the last 3 months, okay? And that's June, July, and August. And you can see where we were back in June and where we are as of right now, as of the end of August, hitting new quarterly highs. Now, what I've done here is I put a couple of channels up, and we're looking at what's called channel resistance. We've bounced off of channel support most recently in the last 2 weeks, but we are coming up upon some interesting resistance. 740 is the first area of resistance, but the longer term resistance, which could be in a couple of weeks, is pegged around 780. That's where we see the long-term channel resistance and the shorter-term channel resistance coming together right around that $780 area. So I call Tesla the high road because it is the high-price stock. Take a look if you want to dig a little deeper, and these are what the options look like with the September 17th expiration. We're talking about right now the at-the-monies are going to be somewhere between the 730s and 735s, depending on how you want to peg it. If we call the 735s the at-the-money options, you're going to pay over $2,000, close to $2,050 for a call option, all right? So that call option is 20 points. That means we're going to need to see Tesla above $755 in order for that to break even. Now, if we see 780 as a potential target, then that makes a lot of sense. But still, it's a lot of money, a lot of dollars to put in. Perhaps call spreads might make better sense because it'll lower the price of that trade. It'll lower the risk of the trade, and it also lowers your break even by the time we get to that 17th of September expiration date. Now, let's take a look at the second stock I want to cover, and that is, once again, the low road, and that's with Ford. Now, Ford Motor Company has absolutely nothing technical in its area when you look at the trend. It doesn't have a trend. But what it does have that you're not seeing here is we're seeing triple stack compression. Basically, what we're seeing is those channels, not so much the long-term channel, but the short and intermediate-term channels screaming right now that we're hitting support. Now, if you can see here, the last time we saw this, there was a buying opportunity, bullish opportunity around the $12 price frame. That took us all the way up to 15.5. So from 12, 13, 14, 15.5, that's $3.50 up. That doesn't sound like a lot, folks, but $3.50 on a $12 stock is quite a bit. It's more than 20%. And imagine what the options returned. But since then, in July, we had a buy signal on this same methodology, and that was trading just below 14.5. And as you can see here, the red area means that we are down on that particular trade. But we most recently got another signal, what we call a rebuy, right down below 13, and now that is up. So this is where we are roughly in the channel right now. And as you can see here, down and then back up again, both of these together, very, very close to break even. So if you're looking at this today, what do the options look like on Ford, the other of the two auto companies? Well, the 13 calls are going to be the call options that are close to the money. The SEP 1713 calls are trading right now at 38 cents. That's $38 to own the stock at 13. So what we need Ford stock to do within the next couple weeks is be at or above $13.38 to break even. Again, you're going to take that 38-cent option and you're going to add that to the strike price. Strike price plus premium is break even at expiration. If we're looking for Ford to go up to, let's say, even 14, even if it comes back up here to 14 or 14.5, we're talking about 14 would give us more than a double on that trade. So Ford doesn't have to go very far. Today's summary, we can find opportunity literally everywhere. I actually took two stocks. One I called the high road, and we just basically bought the trend. And the other one was the low road, looking at something called our darknet design signals, where we're catching what we call triple stack compressions or triple stack support, right? Two entirely different strategies based on the auto industry on two different stocks. Right now, also, it's a matter of what you do with the data that counts. We've crunched a lot of data here and looked at rules-based trading patterns in both Tesla and in Ford. And finally, it's a matter of what type of trading strategy you prefer. And not only that, what your risk tolerance looks like. Hope you enjoyed this video, folks. I'll have more coming. Help us out. Like it if you enjoyed it. Give us a thumbs up. If you're brand new to us, subscribe. You get these videos as soon as they're launched. And we'll see you on the next one. Bye now.